Trading resumed on the Zimbabwean Stock Exchange this week after a month of being shut down. The Zimbabwean government suspended the stock exchange and mobile money payments in a bid to clamp down on alleged illegal activities. Now, although the bourse is operational, 3 stocks remain suspended: Old Mutual, PPC and Seedco. Joining me to talk more about this and the general economy is Batanai Matsika, the head of research at Morgan & Co. Thank you very much for joining us. Now, one, how much damage did that closure do? And secondly, what's the problem with the Old Mutual and the 2 other stocks?
Yeah, so it has sort of created, it has not been good, especially for investor sentiment, because we saw that the market was closed for about a month, and there was no clear reason as to why they decided to actually shut down the whole exchange. But of course, the issues were emanating from what are called implied exchange rates, whereby people were actually calculating implied exchange rates on dual listed companies. And one of them, of course, which is quite popular, was the Old Mutual implied rate that was being used. So really, the exchange rate issue has become very sensitive from a Zimbabwean standpoint, given, of course, the impact it has on inflation. So really, the government then stepped in to say that, how do we deal with the implied rate? And the only, solution that they could think of was really suspending the dual listed companies. So yes, the market is now back, but we're seeing very limited trading volumes. As you can imagine, we're basically trading roughly about 15 million RTGS dollars a day, which is something like 150,000 USD. So that's a small number, especially when you then compare those figures to multi-currency regime numbers, where we used to trade 1 million to 2 million USD a day. So really, in terms of investment sentiment, this whole thing is not quite good at all.
But now the problem with these dual-listed companies and, the illegal foreign exchange dealing, or the problem that the government has with that, is it a genuine concern, or is the government maybe trying to scapegoat, someone for the economic situation in Zimbabwe?
I'll say it's a scapegoat in a way, in the sense that, by the end of the day, the technicality can be applied on almost anything. You can actually come up with an implied exchange rate on anything that's priced across different markets. As you know, there's the Big Mac index. Some people actually use the milk index. And we, as Morgan & Co. Research, we've come up with the Coca-Cola index. So it can be applied anyway. So really blaming it on these dual listed companies doesn't really make sense for us. So really, I would agree that probably is just scapegoating, because the underlying issues within Zimbabwe have to do with productivity, simply because there are shortages of foreign currency. There are ways that the company can, the country can actually generate forex by actually increasing production. So that's, for us, that's the concern.
And just to follow up, what is going on with the Victoria Falls Stock Exchange and, the reports that I've been seeing that Old Mutual might be moved there from the ZSE?
Okay, so we now have 3 stocks that are suspended from the Zimbabwe Stock Exchange, which is basically your PPC, Old Mutual, and Seedco International. So really, they have to find a solution to that. So the solution that has come up is then have an alternative exchange which trades in hard currency. So there's been talk about this hard currency exchange for quite some time. I think when the Minister of Finance came into office, he was actually proposing that. So they are sort of trying to fast track that, and they've said to the end of this month to actually have an alternative hard currency exchange, which is the Victoria Falls Stock Exchange. So we have those 3 companies actually listed there, but they've also said that any other company that wants to raise money in hard FX can actually list on that alternative exchange. But the concern again is around confidence, whether we will find any investors that participate on that market, especially when you then consider that foreign investors within Zimbabwe can't repatriate capital gains, they can't repatriate some of their dividends simply because they are foreign